Welcome to Between Two Chairs, Demystifying Commercial Real Estate, the podcast that brings you the latest insights and trends on the South Florida commercial real estate market, with your hosts, Fernando Arencibia Jr. and Jennifer Wollmann. In each episode, we dive into the world of commercial real estate and break down complex concepts to make them accessible for everyone. Whether you're a real estate professional, a curious investor, or just interested in the South Florida market in general, Between Two Chairs is the podcast for you. So pull up a chair and join us.
Welcome, everybody, to another episode of Between Two Chairs. My name is Fernando Arencibia Jr., and with me, as always, is the very tech-adverse.
Yes, thank you.
I corrected myself.
Yes, you did.
Jennifer Wollmann. Jennifer, say hi.
Hi, everybody, now that I snorted. Well.
I love that. So one of the things that we love to break down is data. And one of the best places to get it is from Gay Corrarton, the chief economist at the Miami Association of Realtors. And every quarter, she comes out with a South Florida report. And so today, we're going to break down quarter two of Gay's report.
Correct. We're just, basically covering like the first half of the year since we're already well into the second half, but because we are seeing the market start to change a little bit as well, with our own business. So starting off kind of while the rest of the American Sunbelt is seeing a major rental cool down, we've been kind of bucking the trend. And so Gay does a really good job, as does the Miami Association of Realtors, in talking about why we remain an unstoppable magnet right now for institutional capital. We secured the #1 spot in the nation for construction intensity, and smart players are placing their bets on Southeast Florida right now.
For sure. Yeah, this is one of those reports that doesn't really tell the entire story because one of the things that she mentions is that commercial sales decline in the first half of 2026 versus 2025, but the fundamentals remain strong. And some of what we're going to break down is going to allude to that. So she says commercial sales declined 13% in the first half of 2026 year to year to $5.42 billion in transactions in the first half of this year. Was there anything there that really surprised you?
No, because we knew with the war and the continued uncertainty with inflation that, all of the dreams that all of us in commercial real estate had at the end of 2025, that things were going to loosen up and get better, kind of took a backseat to continued uncertainty. For the second half, we're seeing people getting comfortable with current interest rates and kind of the uncertainty. So I think we're going to see a change. But I wanted to point out, too, because you and I always talk about the Miami market being Miami, Broward, and Palm Beach County. And I just wanted to point out that recognizing that we had the historic merger between the two major associations in Southeast Florida, Miami Realtors and Our World. So the sheer scale of the local market and the amount of data and information that we're able to get shows a really good picture of where and how the money is moving in that overall market. And I think that was super interesting, and she did a great job showing like the positive rent growth, which was led by Palm Beach County at 2% and Miami at 1.3%. And then she contrasted that with some of the other markets like Tampa that had a decrease. So the Southeast Florida is definitely kind of bucking the trend both nationally and even within our state.
Absolutely. And one of the great things about that merger is that we're going to get better data, cleaner data, more accuracy. So I think, I'm looking forward to what these reports are going to look like in the course of the next few quarters, because I think there's going to be a great quality. And speaking of quality, one of the things that you get out of everything that that you read in the report is that, and it's something we mentioned before, that this flight to quality continues to be, evident in all of the transactions in Dade County.
Correct.
Yeah. And really Dade, Broward, and Palm Beach County. Median sales price per square foot actually increased across most major asset classes. So again, if you're looking at just the transactional decline, you're not really getting the full story. And I think both, if we look at, I think every single asset class, except maybe multifamily, had increases in lease rent.
Correct, and that makes sense. Multifamily, right. It's funny because you look at multifamily and you still see the cranes going up throughout Southeast Florida. So we already had massive delivery in 2025. We continue to have more multifamily being built. So you kind of think, well, why are people still building if rents are going down, et cetera? And the overall view is, again, going to your flight to quality, some of the older buildings that haven't been updated, that's where you're seeing the downward pressure in rents. So those buildings are working a lot more on trying to to keep their tenants. So what can they do to keep the existing tenants? And then on the Class A, what you're seeing is we're having, the driver's license boom is still ongoing. It's not as high as it was during COVID, but there was still a 16% year-over-year increase in out-of-state driver's license. Still, the feeder regions are California, New York, and New Jersey. And so again, that shows the income of the people moving in from those states is significantly higher than what's here. So they're able to pay the higher rents in the Class A multifamily.
For sure. Office was up 12% rents. Industrial 7%, and retail 24%.
Yeah.
My goodness.
It's crazy. Retail, we still have one of the lowest retail vacancy rates in the country. And there have been some pretty big retail sales recently. Kimco just bought, shopping center anchored by Publix. Yeah. So we're still seeing, again, that institutional money, even with the low cap rates on some of these properties where people are saying, how can they be buying at that low cap rate given the cost of capital? They're still doing it because I think they're seeing opportunities right now. The capital's out there. Banks are getting back into lending significantly. So it's just finding the deals that work and that have the room for growth. Nothing
takes the place of experience and time on the market and time in the market. And I remember what feels like not too long ago, very early in my career, going to see a presentation on commercial real estate. At the time, I wasn't doing commercial real estate, but I remember they were kind of sounding the bell for, we have overbuilt in retail, we have too much retail in South Florida. The e-commerce was just gaining speed. And so, really, there was a little bit of a catastrophizing, approach. And this is, I think, a great lesson that I've learned over the years is don't get overwhelmed when you're going to see a presentation and when people make those kind of statements, because you gotta, that's why I like data, because you gotta, when you dive into the data, you realize, well, the fundamentals were always there, but my goodness, it's incredible.
If you look, so it's not just the data, it's the hyper local data, right? So if you look at the national data versus the state data versus like we're looking at this whole mega region, right, versus an individual market within each one of those counties, even within those, you're going to have a completely different view once you get in there.
For sure. One of the highlighted deals in 2026 so far was an affiliate of Moshe Mana, who acquired 450,000 square feet of the renovated SunTrust International Center in downtown Flagler. And I find it so interesting that this one Flagler project that he's working on continues to add to it the idea of creating this one Flagler district center that's going to be the center of technology, fashion, and business in South Florida is incredibly interesting. It also shows that investors are paying premium for the best assets, and it still goes through. Another thing that was interesting, you mentioned about the Tri-County, it is a Tri-County report, is how much Broward has accelerated.
Yeah, we always used to jump over the Broward, Fort Lauderdale area because it seemed like all of the news was taking place either within Miami or Palm Beach counties. Yeah. But now for sure, Fort Lauderdale and Broward in general is on the map, and it's perfect because it used to be the donut hole, right? But now it's actually the connector, right? And with the Bright Line making it so easy to travel between these three counties, yeah, I think Broward is finally coming into its own and doing extremely well.
And I think quarter over quarter, when you look at the biggest deals, it's really very multifamily centric. This half of the year, there was also a 4 warehouse portfolio that was purchased by, Blackstone and Link Logistics in Pompano Beach. But outside of that, if you look at it quarter over quarter, it's really those, large 300-unit multifamily developments that are getting picked up. And I think investors are really liking that. I overheard somebody, speak about it in one of the networking events where they were saying, well, I'm looking for 100 plus units. And they go like, have you looked at Broward? And,
right.
That's really a very interesting dynamic. One of the things that you mentioned already is, my goodness, development hasn't stopped.
There are cranes everywhere. My favorite bird should be the state bird of Florida, should be the crane.
Yeah, we got nearly 19,000 multifamily units under construction in the Miami market, which is just
right,
wild.
That's what I was saying. It seems ironic, right? Because at a time when rents are kind of, going down in certain areas, that we're going to be delivering massive amounts of units. But everyone I've spoken to, and Trepp does a great job of analyzing data, and they've looked at this as well. And the fact that so much institutional money is going into these projects just means that there's going to be a small blip in terms of, waiting for those units to be absorbed before rents increase. So, probably end of 2027, first part of 2028 is when we're going to start seeing a little bit more stabilization. But the funny thing is, to your point, so we went through an industrial building boom, and now some of the Class A and R industrial in these three markets are getting absorbed. We're seeing a little pressure on downward rents, but in reality, that's going to be absorbed, I think, very quickly. Just when you start looking at all the companies that are moving here and opening businesses here, and the continued growth of all of our ports and airports and the cargo that is being transported back and forth between those.
And it's not just multifamily. We got 1.4 million square feet of office under construction, and I think there's still some industrial development, 2.6 million square feet that has been under construction and should be getting delivered, by the end of the year. Not a lot of construction on the retail side. I think that it goes to that 24% increase in leasing rate, and the fact that those things, correlate to each other. Industrial, continues to be resilient. I think we've hit I think quarter two showed that, we kind of hit to a degree the limit of that price elasticity, when it comes to rents, but not a downward trajectory. It just kind of leveled off. We're seeing a lot of, one of the things that I noticed that a lot of people that leased or that started their lease during the pandemic in 2020 or 2021, their lease was coming up, and now they were looking for ways to consolidate, because for them, I think the sticker shock was significant.
Correct. And I think that's where, depending on where your rate is and where you're going as a landlord, that's why, in my opinion, they should be focusing on keeping their existing tenants, because we are seeing inventory tick up, and there being a bit of a pushback, not only in the price per square foot, but in the fact that the triple nets, almost every single lease these days is a triple net lease, and you add the base rent onto the triple nets, which, are mostly insurance and taxes, and that can be a little bit painful for a tenant to absorb.
I know. Listen, I remember one time I had a client, and I had mentioned to him that, they were looking at a warehouse right by Okeechobee Road. I told them, you could rent this triple net. And then another broker told him, well, no, there's not a single industrial in Miami. We don't do triple nets, And it's not that he was wrong, but the number that I gave my client, I was right, whether he was going to rent it gross or he was going to rent it net. And so now I see that everybody has jumped on the bandwagon. Very hard to find, full service or true gross, leases in industrial. That thing has sailed to a degree. Office, listen, how many times do we have to repeat it? Best office market in the country. It's really interesting because when I travel around the country and I speak to other commercial brokers, man, that the office is such a different conversation. They're still talking about conversions. They're still talking about ways to revitalize it. We're kind of in a different a different place.
Although I think it's still, going back to our point, it's the luxury, right? Because you still go into some of the suburban or ex-urban markets in Miami-Dade and you look at B and C office, and they're not at the same, they're not at the same rents. They're not at the same occupancy levels. Right. So that's where, we see the value add potential happening. I don't think the office is going away. You and I don't. We just moved into our new office and love it. But I think, people do want, they want the amenities. They want the quality. They want to feel good when they go to work. They don't want to be in a functionally obsolete office with no windows and they feel like they're working out of a converted janitorial closet or something. So, I think we're seeing that. And look, other markets are already rebounding. I was listening to I think it was the Weekly Take, and they were interviewing people from CBRE whose market is mostly New York. And they're like, look, we need to stop doing office to multifamily conversions and we need to start doing office to office conversions because the demand is there. It's just demand for quality, not,
Well, a couple of things. And, to your point, I think this proves it. We were quoting national averages in the 20s. Now it's down to 17.7%. Our vacancy factor nationally for office. Miami has 13.2. So again, continues to be healthy. That 13.2 is because we're taking into account what you just mentioned, which is the Class B, the Class C. If you're looking at Class A, that is in the single digits. And part of what you're talking about is converting office to office. Well, what does that mean? I says, well, now you improve the quality of the office and you make that investment. And in Class B buildings that are in a very good location or Class C buildings that are in a good location, I think that that's definitely worth the investment because all that we have a significant amount of new office under development, but those rates are going to be crazy, right?
And they're talking about in our core areas, right?
Correct.
They're not so much in the suburbs. I don't consider Coral Gables a suburb anymore, right?
No, but now I think businesses are going to make a decision. Am I willing to pay $100 to $200 a square foot in office to have that? Do I need to have that, or can I go pay $65? Not too far away, and so that's where the opportunity I think is for well-located, office. Class B and Class C office buildings.
And guys, we always talk about the importance of your, economic development councils or downtown development authorities, whatever your economic nonprofit partners are in your area, because you can get grants to improve those properties. So if you are a value-add investor, I would definitely look at the strong economic markets pretty much anywhere in Southeast Florida. Look at the Class B and C buildings, figure out which ones are in an EDC, and find out what's available. You would be surprised by the amount of money and grants that you can get because they want to increase the quality of the buildings in those areas. So anyway, so that's my daily plug for the EDCs.
No, absolutely. I think that there's a lot to this report. We always put the link of the report in our show notes, and we highly encourage you to take a look at it because there is a lot of nuance and there is a lot of specificity to the data as well, and I think that you get really a very good picture of where we're at. What are you monitoring for quarter 3 and quarter 4?
Well, so I think we're going to see something similar to what we saw last year. I think we're going to start seeing transactions pick up in the third quarter, and I think they're going to accelerate in the fourth quarter as people try to get deals done and they start feeling comfortable with where we are. A lot of people are predicting that interest rates are going to go up, so people might be trying to lock in financing and deals now. We personally in this office are seeing more sellers starting to list their properties, whereas before they were like, no, we're going to wait. We're going to wait for the economy to change. Right. We're going to wait for, pricing to go up. Prices are still elevated. So I think they're feeling like they might need to get on the market and sell now before, get their money out and do their next deal. So we're starting to see that. So I think that's going to help volume as well. Everything that we've seen to date and that we've talked about is the much bigger institutional money. They're already in the market. They're continuing to be in the market. So I think now we're going to see the smaller investor also feel more comfortable coming in, since the doom and gloom and some of the stuff that was predicted in the second quarter of this year due to the economic uncertainty and the geopolitical instability. People are just going to get comfortable with where we are because it's been a while, right?
Right.
So.
Yeah, no, I agree. I think it's going to be interesting to see what happens to interest rate and to the interest rate conversation, because now with the new Fed chair, the conversations have shifted tremendously, and I think that there is an acclamation that is happening with the new Fed chairs and the Fed chair's philosophy, which is kind of interesting because with all the rhetoric about changing the Fed chair from the White House, I find it interesting. Well, not much has changed, but I think something has changed, which is that I think that we have a Fed chair that does believe that rates have to go up. And also interestingly that he does not value taking care of one industry or one asset class over another. So I think he looks at the economy almost more monolithic than his predecessors. So it's going to be really interesting. For example, I don't think he believes in propping up the housing sector or looking at valuing commercial or commercial and residential real estate transactions, period, over any other industry. So it's going to be really interesting. And to your point, for a long time, you have people on the sidelines because they're waiting for the rates to go down, and then they hear the rates may go up, and now they're like, okay, where do we, where do the deals make sense, and how do we make this happen? I think that there is quite a lot of negotiation happening, and I think we're going to continue to do that. I think sellers are real sellers, and I think buyers are real buyers. And what I mean by that is that I don't think that they're just kind of posting a number and saying make me move. I think they are generally trying to get the most out of their property, but they're willing to negotiate. So I think that that's going to be really interesting. One last question I was going to ask you is, do you see one asset class, in quarter 3, quarter 4? We saw here, retail, rents go up, office is doing well, or do you think we see more of the same in for the rest of the year?
I think retail and office are still going to be really strong. I think office is a great opportunity still to buy into, and I think industrial is going to do well. I think multifamily is going to be flat, and some people who bought multifamily during the COVID years and low interest rates are going to struggle over the next couple of years with downward rents. But overall, I feel like, everything looks good. I'm keeping a very close eye on the 10-year treasury just because, people, if I can put my money in a treasury, why am I going to, go in for a 5 cap at, on something as risky as real estate or something where there could be downward pressure on rents,
I could tell you, I'm looking at two things. I'm going to monitor the industrial market very closely, especially the rents, just because, Yes, quarter two went up 7%, but it was it was in the single digits compared to the other asset classes. Really interesting to see how that dynamic plays out, especially in certain markets where you have a lot of options and choices now. The other thing is, that the small lots that are for sale that are, let's say, 30,000 square foot or less, that's going to be really interesting because, I think that some people overvalue what they have. Some people, are valuing it correctly. Even those that are valuing it correctly, there's not a huge pool of buyers for those. So it's going to be interesting, are those prices going to adjust so that people actually come in with a reasonable basis in order for them to develop in the future. So I think one last thing I will say is on the street, there's still a lot of conversation about what a hitting your head against the wall experience is to get permitting. Yeah. And I think that is slowing a lot of people down, even people who have incredible amount of experience doing it, who have developed, hundreds of thousands of square feet of commercial. They're getting approached to do some of the development deals. And they're like, I don't want to, I don't know if I want to go through that process.
With the permitting. And to me, what's also like mind-blowing is the disconnect with the permitting cities or entities if it's county. And because I've been hearing, I heard the city of Coral Gables say, oh, we've streamlined our permitting. It's so easy. But then you talk to people that are in the process of getting their permits, and it's a nightmare. So be very careful. Just because the city says, oh, we've streamlined, we're doing great, it still doesn't mean it's any easier to get a permit.
Very, very tough, for sure. All right, everybody.
That's all, folks. I feel like one of those Warner Brothers cartoons.
Yeah, don't date yourself. Hey, all right, everybody. Thank you, everybody, for joining us on this episode of Between Two Chairs. On behalf of Jennifer and myself, we thank you. Jennifer, say bye.
Bye-bye.
Bye, everybody.